Today, I'm going to be showing you 3 things you must know with ICT Concepts. Let's go. Alright, a few things I want to show you guys here today is what is discount, how can we use discount with an FEG, a fair value gap, and what is a market structure shift. Okay, so first things first, discount is a retracement move. It helps you dictate on where price is going to go in a retracement move. So price right here, it's in a retracement move, right? And we come up, we're in discount right now. Okay, so first things off, when we're in a bearish trend, this is premium and this side is discount. Okay, so this line kind of splits the two, but this premium, this discount. If we're in a bullish trend, say for instance here, okay, this is discount and this is premium. And as you can see right here, price comes basically perfectly, taps discount, and that's the retracement move, and then it moves up more. Okay, so what I want to show you guys here is now how to use discount and how to use it effectively with fair value gaps, and how to dictate which fair value gaps are going to work. Okay, so first things first, we're in premium right here, right? Because we're in premium, this FEG doesn't work. This fair value gap does not work. Okay, price just pushes through it. Now I guarantee you if price comes up to this fair value gap, it's going to work. And that's because it's in discount. Okay, I'm going to be showing you guys a couple of examples of this, but I'm just going over the concepts right now. So get that down. Now, what is a market structure shift? Okay, market structure shift shows you a change in trend. Okay, so MSS. Okay, so as you can see, NQ was very bullish right here, right? And now we displaced through a low, so we had a body come down through the low of this low right here, and this shows a change in trend. Okay, so I'm gonna be showing you guys some examples of how that works and stuff like that. So all right, first things first, as you can see, we're in a bearish trend, right? We are in a bearish trend, and price breaks through this high, so this is considered a market structure shift. Okay, now we can expect a bullish trend. Okay, so we're getting a little bit of a retracement move, so let's draw our discount now. Comes down, taps discount, and as you guys can see, like I was explaining, price pushes through this fair value gap because this is in premium, and this fair value gap is the one that holds. Okay, so this fair value gap's below discount. It's in discount. Okay, so you could have entered right here. You have discount, you have market structure shift, and you have a fair value gap. Okay, and you're also sweeping some sort of liquidity right here. So liquidity right here, fair value gap, and also discount. Okay, so your stop could have been after you see this move, see it start moving up, you could have moved up your stop to this low. Okay, but other than that, my stop would have been probably like down here, just because you want to give it some room underneath the fair value gap, because price will tend to come down below a lot, but it'll end up wicking up. So after that move, you move your stop loss to that low, because this low is now a protected low because it swept this liquidity, and now you target whatever the last high that was not taken out is, which is this high right here. As you can see, this high got taken out right here. Now that we're expecting this, you can expect price to come up to this high, which, let's see if it does. I don't even know if it does. Okay, it does. See, wicks that perfectly. You see that? Yeah. That's perfect, actually, because I didn't even know if price was actually going to do that or not, but it did. And as you can see, it actually works. And obviously, price can still go higher. Price is now respecting this. Didn't come to touch this discount, but guys, see, these FEGs, they don't always, they sometimes do work in premium. Okay. So you can't always expect it to come down to this FEG that's in discount. Okay. These can work. They're just lower probability. So all I do is I wait for higher probability setups. Okay. And that's what you guys should do too. It's a mental game. You got to be able to stick to your rules and stuff like that. So yeah, definitely keep this in mind that these can work, but you don't want to take them. That's just you being fearful of missing out, FOMO. Okay. Um, so yeah, be patient. Let it come down here. If it doesn't come down here, you don't get the entry, but you also don't risk much. Okay. So keep keep that in mind. All right. Now that you guys saw this one, let's try to find another one. Okay. So let's play this here. Okay. This looks like market open. Yep, market open. See if we can get one close to market open a little bit. Okay, so right here, guys, look. We're in a bearish trend. Okay, bearish trend right here. And what do we get? We get displacement through this high right here. Okay, so we get a market structure shift right here. And now through this market structure shift, you always want to wait for a retracement. Yeah, it sometimes won't happen, but you just wait for it, okay? You got to be patient. Now, as you guys can see, um, price comes down to discount, taps it, boom, and there's no fair value gap we can really go off of, but as you can see, it does respect this, but it doesn't. It's close to discount, but price did go way below. If I look on the 1 minute, it disrespected it. Can't even get it. But anyways, it's like right there. Um, but 1 minute disrespects it, comes down, but then after tapping discount, that's the retracement move. So now it's going to push higher now. Um, and what's the next high? This is the next high that did not get taken out yet. Okay, and you guys can hold these longer. It can. It can come up here and take this high. Uh, but if you want to hold them, like say you entered a trade here, put your stop there, and say you want to set it here, okay? After price reaches this point right here, you set it to break even, you let it run to this buy side liquidity. And let's see if it does. It does. Okay, so you get stopped at break even, which is why it's smart to take it off here. I mean, you still would have had a. I can't get it, but you still would have had 2.76 risk to reward ratio. But if you want to hold it and take the risk of you getting stopped out at $0 after being in profit here, or you can take some off, but like take half your position off so you secure some of the profit. But if you want to hold it up to here, that's completely up to you, and that's why many people trade differently and many people hold things differently, and you're a different trader. Okay, me personally, I would have looked on the higher time frame. I'm on replay mode right now, but I would have looked on the higher time frame. See, would I have held this? Okay. Yeah, I probably um I'm not really going into that depth, but I probably would have held it until up here and set my stop break even. Maybe took half off right here, but that's me. And as you see, it looks like it's coming. It came down, swept this liquidity, failed to displace through. Which, guys, by the way, uh, you guys may be wondering, like, why isn't this a market structure shift since it closed below? You need to see a big close below. This isn't big enough for me. Okay, this close is not big enough for me, especially since it just swept liquidity too. You need to see a candle close like to there, to where this is. Okay, but looks like it might come up with sleep just now. Oh, I didn't even go back that far. Okay, but okay, that was today. This all happened today. I didn't even realize that, but okay. Because I was on the markets today because there's no news Monday. I don't trade no news Mondays. I didn't realize I was only that far back. But yeah, okay. Yeah. All right, that's all I have for you guys today. If you enjoyed, like and subscribe for more trading content. Peace.